When a legal market blocks a product, restricts a price, or makes access too difficult, the demand does not always disappear. Sometimes it moves underground. That underground exchange is where black markets begin. A black market is an unofficial exchange that happens outside legal rules. It usually appears when people still want something but the legal path is blocked, too expensive, too slow, or too restricted. The demand remains, so the trade moves into a hidden space. Think about tickets with strict resale limits. If fans still want seats and cannot buy them legally, some may pay a reseller quietly. The seller is not only selling the ticket, they are selling access around the rule. That is how a restriction can create an underground price. Unmet demand matters because it changes what looks reasonable in this specific setting. In how black markets form, the person may feel they are reacting freely, while unmet demand and legal restriction or price control have already narrowed the path. The first mistake is believing a ban automatically removes desire. A legal restriction can remove open supply without removing the people who still want the product, ticket, currency, medicine, or service. That leftover demand is the space where hidden sellers appear. Restricted goods show the pattern clearly. When the legal path is too risky, slow, expensive, or unavailable, buyers may accept a hidden seller even when they know the exchange is unsafe. The underground market sells access as much as it sells the item. Risk becomes part of the price. A black market seller may charge more because they face punishment, confiscation, unreliable partners, and no ordinary legal protection. The buyer pays not only for the product but also for secrecy and danger. The calendar can turn a small oversight into a larger problem. A decision that was easy to adjust on Monday may be expensive to reverse after a signature, deadline, or argument. A black market also weakens quality control. In a legal market, buyers can use receipts, reviews, courts, regulators, labels, and refunds. In a hidden market, a fake product or broken promise is harder to challenge without exposing the buyer too. Unofficial currency trading shows the same pressure in a different form. If the official exchange rate does not match what people can actually get, a hidden rate may appear. Buyers are not only paying for currency, they are paying for access outside the official rule. Risk premium often hides in the details of black markets. In how black markets form, it may sit inside risk premium, so the warning sign is easy to miss until the consequence is already moving. Enforcement changes the market's shape. Light enforcement may let the trade become almost open. Harsh enforcement may push it deeper and raise the risk premium. Either way, the rule changes incentives rather than simply ending the exchange. Lack of consumer protection deserves attention near the end of the chain. In how black markets form, it can decide whether the outcome becomes manageable or turns into the more difficult version of the problem. People do not make these choices as machines. They bring worry, hope, pressure, and personal history into the decision. The useful view is the one that links what happened to the pressure that made it more likely. Black markets can also punish honest businesses. A legal seller who pays taxes, follows safety rules, and carries licensing costs may compete against hidden sellers who ignore those obligations. That can weaken the legal market further. The next useful move is specific. Identify the condition that controls the outcome and deal with it before the situation hardens. Black markets can also appear when legal access is too slow. If people cannot get permits, appointments, currency, medicine, or tickets through official channels, some will pay extra for speed. The hidden seller is selling access as much as the item. A practical way to understand the issue is to track unmet demand. If people still want the item and the legal path cannot meet that demand safely, the underground path becomes more likely. The important lesson is that a simple label is not enough. The decision improves when the moving parts are named clearly. Enforcement changes the shape of the market. Light enforcement may let an underground trade become open and normalized. Harsh enforcement may push it deeper, raise prices, and increase the role of people willing to take bigger risks. For black markets, the strongest protection is preparation before pressure rises. Handling black markets early can prevent the messier version later, especially when foreign currency traded unofficially during controls is already becoming possible. Shortages can make black markets more attractive. If the legal price is held below the level where supply meets demand, shelves may empty. People who still want the product may pay extra unofficially because waiting has its own cost. Black markets are also hard to measure. Because transactions are hidden, governments and researchers may underestimate the size of the activity, which makes policy decisions harder. In how black markets form, this extra check matters because tickets resold above legal limits can look simple until unmet demand and legal restriction or price control are both included. In real life, the value of the topic is not the definition. It is the ability to recognize the pattern before the decision is already locked. Black markets can also become harder to remove once people build networks around them. Suppliers, middlemen, enforcers, and repeat buyers may all adapt to the hidden system. Removing the original rule may not instantly erase those relationships. Policy design matters because every restriction creates a question. Where will the unmet demand go? If there is no legal substitute, the answer may be a hidden market with worse information and fewer protections. Consumers may still choose the illegal option because it is cheaper, faster, or available. That choice can be understandable at the individual level while still creating broader risks for safety and enforcement. Black markets usually form when demand remains stronger than legal access. If people still want the product or service, a ban or strict control may not erase the desire. It can simply change where the exchange happens and who is willing to take the risk of supplying it. Risk changes the price. A seller in a black market may charge more because they face fines, arrest, violence, confiscation, or unreliable enforcement. The buyer is not only paying for the product, they are also paying for secrecy, danger, and lack of normal consumer protection. Quality becomes harder to verify. In a legal market, labels, contracts, receipts, inspections, and dispute systems can protect buyers. In an illegal market, a buyer may not be able to complain if the product is unsafe, fake, overpriced, or never delivered. The hidden market removes the normal safety net. Black markets can also corrupt trust because participants cannot rely on ordinary enforcement. If someone cheats, the buyer may not go to court or consumer protection. That silence gives dishonest sellers more room. The underground price can send misleading signals. A high black market price may attract more suppliers, but it may also attract people willing to use fraud or intimidation. Because the market is hidden, normal reputation systems and legal records are weaker. The lesson is not that every rule is wrong. Some rules protect people from real harm. The point is that restrictions also create incentives. If policy ignores demand, substitutes, enforcement costs, and safety risks, the underground market may become more dangerous than the legal problem it tried to solve. Another cost is violence or coercion when disputes cannot be handled openly. Legal markets have their own problems, but hidden markets often replace paperwork with riskier forms of enforcement.